Ladies and gentlemen, boys and girls, thank you for joining us on another episode of the Bamboo Stock Market Course
2.0.
That's right, and today we are talking about bears. What are bears?
So in the stock market, you can have a bear market or a bull market.
Okay.
Yeah.
What is that?
And a bull market is when the stock prices rise continuously. So everyone is making money and we're happy, we love it.
And a bear market is the opposite. This is when prices are going down. I mean, nobody loves a bear market, but what goes up must
Surely
come down.
And this is the part of this whole investing thing that gets me scared, because I can't imagine I've put so much money into this and then it just goes down. Really and truly, I will not be able to bear it. You know I had to.
Well, it's good that you're here because in this episode, we're going to be talking about economic volatility, strategies for investing during tough times, and why you should actually be buying the dip. Volatility is when the stock market experiences periods of unpredictable and sometimes sharp price movements. People often think about volatility only when prices fall, but volatility can also refer to sudden price rises as well.
It can be scary for new investors to invest during these times, but here are 2 strategies for investing during volatile or scary times.
Number 1, and you've all heard this word before, diversify. Not everything in the stock market will be down at the same time. There'll be one sector or area of the economy that is doing well compared to the others. So that's why it's good to diversify your portfolio by including many areas of the economy. So that way, if one part of your portfolio is down, then another part might be up, and then you can hedge against volatility.
Yep, correct. And number 2, stay invested and be patient. You may be anxious during these times, but know that this is how the market works, right? You shouldn't just go and sell all your shares because you're freaking out. Stay calm, cool, and collected.
Okay, that makes a lot of sense. I think that makes a lot more sense. So if I'm looking for ETFs or companies that do well during volatile times,
Yes.
where should I look to?
So for ETFs, you have gold ETFs, you have defensive ETFs, you have the inverse ETFs that we talked about before. So there's a lot of different options, actually.
Yeah. So those are ETFs known for withstanding volatility. And for stocks, you want to make sure you're investing in big, stable companies that have been around for a pretty long time. So this means that they've had their fair share of market volatility and corrections, and they're able to handle it.
Okay, so for example, we were talking about Apple in the last episode. Would that be a good example?
Exactly. So people that buy Apple products, but also think about, no matter how bad things are, you must eat. So,
Right.
companies that sell food or healthcare,
Yep.
Always a good idea. Utilities.
Yeah. What still makes me puzzled though is why is it that I can see that this thing is going down, but I'll still go and buy it? Why?
Think about it. You remember at the beginning, we said you want to buy low and sell high, right? So if it's going down, that means the price is going down. And so if this is a stable company, a great company, we spoke about Apple before. If you hear that the price of an Apple stock is lower than it was before, you're not going to be like, Apple is now a trash company. You're going to think Apple is now on sale.
Okay,
right?
so is this what people mean when they say buy the dip?
Exactly, because the
Yes,
price is dipping.
buy the dip.
Exactly, buy the dip.
You got it.
And so when you buy when the stock price is low, this means that there's a good chance that when the company starts doing well again, there's a good chance that the stock price will go high. And so you'd have made money. Easy peasy.
That makes a lot of sense. Okay, so it's pretty simple. Just find companies I'm interested in, learn about them, and then decide when to buy the dip.
Yep.
Exactly. And hold.
And
Remember
hold.
that. Yeah.
But do you want to now buy low and wait for it to go high?
Ah, exactly, so that I
Yeah.
can sell high. Okay, makes a lot of sense.
No, that makes sense. So that was a really simplified version. And Temi,
Yes.
our fantastic teachers.
We are.
We've done well.
Definitely.
We really are.
Definitely. Now that we're armed with all this information, we're going to find out how to get started on Bamboo.
Yeah. So tune in, guys, for the next episode of Bamboo Stock Market Course 2.0.